Joining me now is Mr. Anuj Khandelwal, who is the business head of Greece Cement at JK Cement. Uh, Mr. Khandelwal, thank you very much for joining us on Deep Dive. Let's begin with the entire thing on the kind of demand that we are seeing for cement. Do you think there is a possibility that the demand may pick up from here on? We've seen muted cement growth coming in. Expectation was that with more infra coming in, more capex coming in, there would be more demand coming in.
Okay, firstly, many thanks for inviting me on this show. I would slightly differ with the assessment. Till now, the demand is not muted, it is quite steady. Um, for the year gone by, FY 26, the demand grew by 6 to 7%, which is quite decent for a large size mass scale industry like ours. In Q1 also, as you have been seeing the results and more results will come in, you will realize that the demand has grown by 7 to 8%. So overall, at least for this financial year, and I'm including July as well, the demand I would categorize as quite robust on the ground. Uh, these are early parts of the year. It's the first 4 months, but there is no reason to believe why the demand would not be good going forward. The demand levers are well in place. Yes, how much impact the different pattern of monsoon this year might have is yet to be seen. Otherwise, till now, for the first 4 months, demand has been very robust.
Sir, how have you seen the cost pressures panning out at this point in time? Given the fact that you have geopolitics also playing a big role, has the cost been able to, as a company, you've been able to manage that kind of cost with respect to fuel, energy costs, and others?
So that is just one of the bigger reasons for concerns for the industry. The geopolitical situation has definitely impacted the industry quite a bit. With the increase in energy basket, the pet coke and the coal prices, which act as the fuel for our kilns, has gone up and has gone up quite a bit by at least around 25 to 30%. Uh, the it also led to increase in the cost of the bags in which the cement is packed, which is now slightly coming down, which is a good sign, but still higher than what was there in February levels by around 50 to 60 rupee per ton. And lastly, 20% of our cost is transportation cost, and with the diesel price increases, which had to be taken up by the country given the geopolitical situation, the freight cost has also increased. So overall, the cost basket, has gone up by around 300 rupee per ton, which is quite significant in our industry. Some bit of it we could pass on as price increases to the customer, but the rest we are absorbing. So yes, the geopolitical situation is a concern for the profitability of the industry per se, and we hope as the things settle and it's a hope as of now. The cost structures of the industry will again normalize.
Hmm. Give us a sense of because cement being a largely regional play and logistics plays a very important role. How have you been able to absorb and what percentage have you able to pass on to the consumers?
Very rightly asked, Sajid. Cement is completely a regional play, and even the cost points which I was mentioning in the earlier question are a lot dependent region by region. In North, the cost impact is much higher because it is dependent on completely imported fuel basket, while in East and to some extent in Central, the impact is lesser because it's dependent on the Indian coal. So, but from a region by region basis. The eastern region was the best, was the most well off because the price increases also happened and the cost impact was also muted. So the eastern region was best. Southern region, while the cost increases happened, but the price increases also happened consumptively. So southern region was also quite insulated. The worst hit was central region where cost increases happened to some extent, but the price increase did not happen at all. North and west were steady. So it all depends also on the demand supply dynamics of each region. Uh, each region, the demand supply dynamics were better, and hence the price increases were moved hand in hand with the cost increases. But in central region, on the other end of the spectrum, where the demand supply dynamics are not so favorable, there basically the price increases did not happen, and while the basically the cost increases did happen.
Interesting, sir. Give us a sense of how do you look at passing on? What is the kind of metrics that you use to pass on the cost? Given the fact that energy costs and feedstock costs is something which will impact your margins. How difficult or how easy it is to pass on these costs to the consumer? Because on a regional play, you have highly competitive players, smaller players, and any increase in prices impacts your realizations. Not only that, but also volumes also if price increases are much higher.
See, pricing is a art more than a science, but it is basically, it's like any other industry where one looks at the demand supply dynamics as to what would be the market demand projected to be like in a month, what is the supply, what is the price elasticity possible for a customer, how are other players going to react. So there are just multiple factors, and then a studied call is taken by each individual player as to what should be the price increase, depending on the situation each of them are. And then, depending on how the change in prices are, getting absorbed in the market, course corrections are taken.
Hmm. Currently the installed capacity for the industry is around 718 million tons per annum. What we understand is that over the next 3 to 4 years, you have additional 200 million tons which is coming in into the capacity. But demand is expected to grow only at 7 to 8%. Do you see calibration of this capacity addition coming in now?
See, calibration, you've rightly asked, Sajid, calibration has already happened to some extent, and many players are on record of saying that we will make a more, let's say, conscious call on when and how to increase the capacity. Uh, there are some big players who also delayed their capex plans, which is, I believe, is good for the industry and right call as well. There are some players who would have expanded but have done acquisitions, which means the additional capacity for the industry doesn't get added, but the financial bandwidth which a player had to put in more capacity get absorbed because the player is doing acquisitions. So, in a way, if you were to look at it, uh, while yes, your overall number is right as per the announcement, but what would happen? There would be only a few players putting in organic capacity for the next 3 to 4 years.
Hmm. Interestingly, the consolidation phase is also seems to be narrowing now because there aren't much of capacities which are there, and the new capacities or which people are talking about are greenfield which are coming in as well for some of the bigger players. Do you think that that will continue, or that will also be a slow addition in capacity rather than and what we saw consolidation happening in the last 3 years of acquisitions and mergers which were there. Now it is something which is going to be a gradual brownfield or a greenfield capacity addition that will come in.
No, I think the phase of consolidation is not over. And I say that for multiple reasons. See, last 2 to 3 years, there has been a flurry of acquisitions, and it will take time for the people who've acquired various assets to make it settle, get their balance sheet in place. But that doesn't mean that the consolidation phase is over. The reason I also say that the consolidation phase will continue is because uh, increasingly cement industry is also becoming something where the profitability is dependent on scale. So as the gap increases between the larger players and the smaller players will find it more difficult to compete on profitability, and hence, uh, if the profitability is constrained, there will be that tendency or that willingness to look at exiting. So I think the consolidation phase is not over. We'll again see a phase. And if you look at various other industries in India, you see most of the industries now consolidating towards a few bigger players. Cement still has a lot of mid-size and small players, so I think consolidation will happen. In terms of organic capacity, look, it will be steady. As I said, if you look at the plans of many players have phased out the plans, and not many mid to small size players are in fact going ahead with the capacity addition. So even the organic capacity is now to a large extent left to the top 6 to 7 players in the industry, and then some more sporadic expansions by the smaller or mid players. So even the organic capacities are being right now done by the larger players as well. Organic capacity expansion is also difficult because it also depends on the limestone reserves a player has, and those it needs various permissions. The economics should work out. So organic capacity expansion is not uh, something which can be done very fast across the board.
And what do you think if M&A will continue or consolidation phase will continue? What will be the drivers for that consolidation? What are the kind of things a company would be looking at to go for that M&A at this point in time?
So as there are multiple factors which go into decision of an acquisition. One of the biggest driving forces is whether the acquiring company is actually present in a region or sees that more of a white space which it needs to fill. A classic example is a recent acquisition which happened in the central region by a company which was not present there, and it was a great call by that company. So that is one of the driving forces. The other most important criteria for an acquisition is whether the acquiring company has an inherent belief that it can either turn around the asset basis the brand the other company has, or the plant equipments the other company has, or whether it can pivot that acquisition into a larger play. For example, the company which it wants to acquire has a lot of limestone reserve, but the company does not have the financial muscle to do the organic expansion. But an acquiring company can acquire that asset, use the limestone reserves, and drive more and more capacity in the vicinity. So both of these are driving forces. At the end of the day, also it finally comes down to the brass tacks as to at what price the deal is available, and the acquiring company then takes a call on whether that's the right price for them to get into the asset.
Margin pressures are determined by, as you mentioned, higher pet coke prices, diesel cost, higher maintenance cost, packaging, and limited, cement price hikes. What would be the drivers for the margin on a positive side?
See, on the positive side, there are very broadly, one can speak of multiple levers, but there is very broadly two to three levers only. First is, of course, working on your own, and assuming that the pricing is an externality, depends on the demand supply situation, as I said. For internally a company, the levers which are most important are building a brand so that it can command a better price versus the competitor. Second, lever is working on the cost and looking at all the latest technologies which keep coming on, working on green power so that it reduces the energy cost. Working on newer technologies like EV in, for example, in mining, etc. So there are the other levers, and the third lever to increase the margin, and I truly believe is trying to increase scale, because with scale this business becomes, and we are, the industry is also realizing it very well, that scale is important also to drive profitability and relevance in the market.
From a technology point of view, because you mentioned technology here, a lot of companies are now looking at waste heat recovery, and is that going to drive your operational efficiency as well?
See, every new kiln which is now getting commissioned, I don't know if any kiln does not have a waste heat recovery, and that is a definite, let's say, a technology to adapt, because not only it reduces cost, it also serves the environment very well. We do not have to burn coal or conventional fuel to get the power. The power is self-generated. So yes, waste heat recovery is something which might have been something as a new concept maybe 10 years back, but now I would believe that it's par for the course, and every company who's expanding into new clinker lines is putting up waste heat recovery, which is an excellent technology which is there.
And is there anything else that can be done to bring down your fuel cost efficient and the cost pressure which is there?
See, there are multiple initiatives which are worked across by various companies. So there is no magic wand that if there was a magic wand and the fuel or the power cost would come down. So yeah, there are just small levers, but multiple of them.
Hmm. Since many of the companies have captive coal as part of their entire portfolio, is coal gasification option for you guys?
Actually, in cement industry, not many companies have captive coal because you know actually very few have. So this is not so relevant for the cement industry per se. Plus, coal gasification is a completely different business and it's a very high capex business. So for people also who have captive coal mines, and as I said, there are very few of them. Uh, I don't think so. They will think of coal gasification alongside the cement business. If someone wants to diversify into a new business, then yes, a person can think about it. But it's a very high capex project.
Hmm. Uh, One of the few four engines for demand for cement has been the housing sector. You have infra, then you have rural recovery, and then you have private capex. Among the four, where do you see the maximum demand coming in, and which of the sector is vibrant at this point in time for you?
So actually, great question, Sanjeev, because all the four cylinders are right now firing, maybe at different speeds, but it is quite firing. I think in future, I will again say infra and housing might rule the roost. Infra, there is so much work happening across the country. Maybe slight slowdowns for a few months here or there, but if you also look at the projects which have been announced, whether it is river linking projects, whether it is bullet trains, whether it is metros across cities, there are just many. Infrastructure has boomed quite a bit for the last 8 to 10 years, and that is where the boom is again likely to continue happening. That's the first sector. Second sector is housing. There is still so much to be done because housing is something which is for each and every individual person in this country. It's a ambition, it's a dream. People who do not have their own houses want to build their own houses. People who have their own houses wants to upgrade. So housing is, and given the population of this country, housing is something which is a all-weather friend for the cement industry.
Hmm. What about rural recovery? Are you seeing good demand coming from rural areas as well?
Yes. Rural area, at least I can speak of the last quarter. Rural area was good across each and every region. There is work happening at the grassroots, and India is still quite heavily rural. So yes, rural also there is a good amount of demand which is there.
And from a private capex point of view,
I
are
would
the
say
sect
that is the commercial sector that fluctuates. Uh, one of the big levers which the industry is banking upon is the data centers and whether they would come up and they would come up at large scale. But the commercial segment of cement is something which fluctuates a bit. But if I were to go back to your earlier question as to which segments I want to place bets on, it would be infrastructure and housing.
Hmm. Uh, Give us a sense of the regional demand scenario at this point in time between north, south, east, west, and central. Where do you see demand on a sustainable basis?
Tough question because I could look at quarter by quarter and I might give you a different answer. Uh, Maybe in the recent quarter, East was slightly subdued in terms of demand. However, demand was very robust in the central region, in the northern region. The states which historically did not have that much development are catching up and catching up fast. A very good example is Uttar Pradesh, where the demand growth has been excellent for the last quite a few years as the development picks up. Uh, so I would say, demand growth likely to be very broad based. People have good expectations of the East market, and East market has delivered very well for the last few years, and the expectations are even more because it is slightly lower on the development curve right now. So I think across the country, I would say that the demand growth is likely to be good. I would, if I were to put my money, I would put my money more on the central and the east region.
Interesting, Anuj. You're giving me that perspective, but give us a sense of also from a market's point of view, what would be the driver of for cement sector? Which are the factors which will drive them? Something like cement prices always do that, but they are volatile. But aside of cement prices, where will be the which are the factors which will drive profitability, margin expansion for cement companies, and as a whole, the drivers for the entire next cement rally?
See, inherently, if you look at it, for the cement industry, as I said, this let's say this geopolitical situation apart, which is let's say an aberration. A lot of cement profitability also gets driven by the kind of demand growth which is there because it solves for a lot of things. Now, hence the biggest lever would be demand growth, and the biggest lever for the demand growth is the kind of GDP growth which the country is hoping for. Because as more and more prosperity comes up, one of the segments where the most money goes in is building houses, because that is one of the biggest aspiration buys or the investments of each and every one of us, right? So the GDP growth and the broader economic growth leading to the demand growth of cement is the biggest, let's say, a margin and a size uh, enhancer for the cement industry, which is there. In terms of other levers, I think the other macro factor on this geopolitical tension easing up and the fuel basket returning to normal levels is the second big enhancer.
Anuj, thank you very much for joining us on Deep Dive to give us a perspective on the cement sector. That was Anuj Khandelwal, business head, Grace Cement
Thank
at
you.
JK Cement, giving us a perspective on the entire cement sector and what kind of challenges it's facing now. Thank you very much for watching Deep Dive.